Joining me for today's Options Insight is Kevin Kelly. He's Chief Investment Officer at, what's your firm, Kevin?
Recon Capital Partners.
Thank you. Recon Capital Partners. I should have remembered that. Kevin, you know, we seem to be definitely in the good news is bad news area today with 3 economic reports this morning beating estimates, yields going up in the bond market, and stocks going down. I mean, is that pretty much the read here?
Yeah, everything's trading in a macro view, right? So if we look at all the options volume and where the trading is going, it's really in the S&P 500, the Russell 2000, as well as VIX. And you can see there's investor demand for that because the Fed's has their put, enacted since 2008. So if we look where volumes are, it's in those 3 indices. And the CBOE actually just released weekly options on the VIX, as well as 2 new ETFs, VXUP, VXDN, which give you access to spot VIX. So you're seeing a lot of demand for these macro trades as opposed to individual names. So that's what's really happening in the marketplace.
But you say there's also a case to be made that you should be watching capital flows in this market. Explain to me what you mean by that.
What we mean by that is we're seeing where all the capital is flowing macro-wise. So out of the United States, over to Asia, over to Europe, right? So we look at the capital flows with the bund rising, right? So everybody was getting out of the bund, even though the ECB is implementing their quantitative easing. So it's not macroeconomic news that's driving it. It's the capital flows in the markets because liquidity is out there. So people are placing their bets.
It's just a matter of where it is going. I want to talk about your individual trade today because given the sort of choppiness that we're seeing on the macro level, you are looking to Google in this market. How are you playing it? And then let's dig into why.
Yeah, Google is a best-in-breed class name, right? But they don't actually pay out a dividend to shareholders. But tech is such a strong space, and Google is a stable name that people can feel really comfortable about. So what we're looking to do is to sell actually a 2% out-of-the-money call option against Google, especially because, they've reported earnings, it's been out there. You can go out 1 month and actually generate about 1.3%, 1.4%, and actually bring that in while you still get a 2% upside move in the name. And this trade is actually off of a CBOE index, the BXY, which actually has outperformed the S&P 500, the Treasury indexes. So it's a stable index, and you can actually start using that strategy to apply to individual names you feel comfortable with.
Okay, and so what do you get out of it in the end?
So what you get out of it is you own a name that you want to have exposure to. So you want to own Google. Tech is one of the best spots to be in the market right now. But for the next month, you don't think there's going to be much news. We're in a low volatility environment. So what you want to do is sell a call, buy Google, sell a call against it, bring in that 1.3%, and consistently just sell that. So you can turn Google into a bond or a dividend player, depending on how.
Gotcha. And specifically, which are you buying and which are you selling?
So we're buying Google here at this price, and we were looking to sell before the sell-off this morning, the 550 strike. You get about $7 for that. Adjust it down to just 2% out of the money, and then you can do the trade.
Gotcha. And we're at about 531 right now. Also, just wanted to quickly ask you about a stock that's in the news today. That is Charter. Now that the news is out there and that it's buying Time Warner, the stock's actually been rising today. What's happening in the options market?
So what's happening in the options market is actually going into Comcast, because Comcast was the loser essentially in this whole Time Warner trade. And you're starting to see people actually sell some puts as well as buy some calls because it's a cheaper value name and they have been executing well. So Comcast is really the big player. It's a great name people want exposure to, and that's where the options activity is going into.
Interesting. Okay. Comcast, the underdog. That's not something, or the value, that's not something you hear about too often. I should mention Charter has turned lower now, trading lower by about 0.5%. Kevin Kelly, Recon Capital Partners, thank you so much.